Hello, I'm Rachel. Thanks for tuning in to Kalkine TV for the Daily Crypto Catch. Now, an industry body set out a global framework yesterday for trading derivatives linked to crypto assets to avoid an FTX-style collapse, sowing confusion over ownership. The International Swaps and Derivatives Association published guidance for trading digital asset derivatives to clarify what happens when things go wrong in an underlying market, such as the collapse of crypto exchange FTX. While most of the recent problems have occurred in the spot cryptocurrency market, many of the legal uncertainties could affect the digital asset derivatives too. ISDA already oversees the master agreement or template used by banks to trade trillions of dollars in derivatives globally. It will now include the body's first standard documentation for trading digital asset derivatives, initially covering non-deliverable forwards and options on Bitcoin and Ether. It could be expanded in the future to cover additional product types, including tokenized securities and other digital assets executed on distributed ledger technology. Moving on, in U.S., Democratic Senators Elizabeth Warren and Ron Wyden are calling on the country's accounting watchdog to increase oversight of firms that audit cryptocurrency companies in the wake of the collapse of crypto exchange FTX. In a letter to the U.S. Public Company Accounting Oversight Board made public yesterday, Warren and Wyden questioned the agency, which oversees registered public accounting firms around the world, as to why auditing firms working with the FTX failed to identify corporate mismanagement and the lack of internal controls that federal prosecutors have alleged. Warren and Wyden wrote that PCAOB registered auditors perform sham audits even for firms that may lay outside of PCAOB's jurisdiction, and that they tarnish the credibility. A U.S. Public Company Accounting Oversight Board spokesperson confirmed the board had received the letter and said it would respond to lawmakers directly. And lastly, FTX has objected to a U.S. Department of Justice request for an independent investigation into the once prominent crypto exchange's collapse, saying it is already conducting a wide-ranging probe that includes family members of FTX founder Sam Bankman-Fried. FTX said in a court filing in Delaware late on Wednesday that the DOJ's proposed review would only add cost and delay to its bankruptcy case. FTX acknowledged fraud, dishonesty, incompetence, misconduct, mismanagement and irregularity in its past conduct, but said its previous wrongdoing has already been probed by the company's new management, its creditors and law enforcement agencies. As part of its own investigation, FTX asked U.S. bankruptcy judge John Dorsey, who is overseeing its Chapter 11 proceedings, to help it secure documents from Bankman-Fried, members of his family and other insiders with information about FTX transactions that used misappropriated and stolen funds. These transactions, it said, include a $16.7 million Bahamian real estate purchase under the name of Bankman-Fried's parents, Joseph Bankman and Barbara Fried. Moving on to market news now, and Bitcoin lost marginally from this time yesterday, losing 2.1% in the last 24 hours. It was recently trading at just above $22,696 US. That's around 31,756 AUD. Meanwhile, Ethereum is 1,560 US. That's down 2.65%. Now, Tether is down 0.01% to $1.40. Well, that's all for this edition of the Daily Crypto Catch. Stay tuned to Kalkine TV for the latest market updates, business news and exclusive interviews. I'm Rachel. Thanks for joining me.